Assalamualaikum and a very good day to everyone. I am Nur Kaisara Hanani binti Rasni. I'll be presenting my group from 3M, which is group 2, to discuss about club and societies. So in this topic, we will discuss about 5 main topics, which is the first one, the definition of the club. Second one, we will determine the resident status of the club. Next, we will also assess the gross income, and we will also determine and discuss about the exemptions of income tax for club. And lastly, we will also compute the chargeable income and tax payable for club.
My name is Nur Aisha Lisa, and I will be presenting about definition of the club. A club is formed are not for commercial purposes. It is for social, recreational, sports, arts, science, literature, or other leisure pursuits for the interest and benefit or for their club members. Club includes a joint management body, a management corporation, and residents association, which defines as community association for property owner. The activities in clubs are trade dealings to increase profit that is subjected to taxation as the business profits. For example, athletic club, professional football club, historical society club, and more. So I will continue afterwards. For now, I am going to pass this to the next presenter.
Hi, my name is Sharfa Amira Nabila, and for my part, I'm going to explain about the resident status of a club. The resident status of a club, association, or other similar institution is determined in accordance with paragraph 8, section 1, subsection B, and paragraph 8, section 1, subsection C of the income tax allowance. According to paragraph 8, section 1, subsection B, a club, association, or other similar institution carrying on a trade or business is resident in nature for the basis year of a year of assessment if at any time during the basis year the management and control of its business or any of its business is exercised in Malaysia. Well, according to paragraph 8, section 1, subsection C, any club, association, or other similar institution that is not carrying on a trade or business is still resident in Malaysia for the basis year for a year of assessment if at any time during the basis year the management and the control of its affairs are exercised in Malaysia by its directors or other controlling activities such as board of management. Well, that's all from me. I'm going to pass this to the next presenter to assess the gross income of club.
Assalamualaikum. My name is Aisha Nabiha binti Muhammad Zaki, and I will be explaining how to assess the gross income of club. So club will have two sources of income, which is income from members and income from non-members. So any income arises from transaction with the members, it will not be subject to tax, which include all these following below. So income from non-members, any dealings with the non-members will be treated as business income, which include all these income. So income derived from transaction with the spouses, parents, and children of the members are subject to tax. And the cash donation received from members or non-members is capital received free from income tax. So the next part is income from investment and external sources. So income from investment include such as rent, dividend, interest, which dividend is non-mutual receipt are taxable. If dividend is single-tier dividend, it will be exempted. So the arrangement with external parties, the amount paid to the club by external party for operating premises, all of these are fully taxable. A club If it is not an approved charitable institution, it will not be granted tax exemption under the paragraph 13 of Schedule C of ITA. So voluntary gift of money for charitable purpose are taxable. However, the amount which is spent off to the specific charitable is deductible. And unutilized sums of voluntary gift will be taxable, and a club which qualify as an approved institution will be tax exempted. So the next is expenses incurred and the qualifying capital expenditure for claiming capital allowance. So expenses that are wholly incurred is allowable as deduction to determine the adjusted income from non-members. Capital expenditure incurred and asset used on transaction will be qualified for capital allowance. So expenses incurred from members are not deductible and it will be disregarded. The next is capital expenditure incurred on asset used on the transaction with members will not be qualified for capital allowance. And lastly, the expenses incurred capital allowance common from members and non-members need to be apportioned into the members portion and the non-members portion. The next part is the tax treatment of the revenue expenses. So the amount allowed as revenue expenses to deduct is in accordance with the formula A times B over C. So A is the common revenue expenses times with B, gross income from transaction with non-members, and C is the gross income from the transaction of members and non-members. So the next is how to assess the capital allowance. So the capital allowance that allowed as deduction is using the formula D times B over C. So D is the common capital allowance, which is time with B, gross income of non-members, and C is the gross income from transaction with members and non-members. So the next is approved donation under section 44 subsection C, subsection 6. So the cash donation to approved institutions are entitled to a 10% deduction of aggregate income. However, it needs to be apportioned in accordance with G times H over I. So G is the cash donation under section 44 subsection 6, and H is the aggregate income from transaction with non-members over I, aggregate income from transaction with members and non-members. Finally, this is the formula of the club, which divided into two, which is for members and non-members. For the members, the formula will start with the section for a business income with the gross income of the members less allowable deduction, which will get adjusted income, and then we'll get finally statutory income. The expenses, capital allowances, losses, and donation will be disregarded under the members formula. And for the non-members formula, which we will start with direct revenue expenses added with the common revenue expenses, which will be apportioned on gross income, and will get the adjusted income. After the adjusted income, it will less the common planned expenditure, which is the capital allowances, which will be apportioned on gross income, and finally we'll get the statutory income of the club, and then it will be added with the investment income, and finally we'll get the aggregate income. After the aggregate income, it will be deduct the approved donation, which is apportioned on 10% of aggregate income, and it will be get the chargeable income for the non-members of the club.
Hi, I am Nur Kaisara Halim Dirasni. I'll be discussing about the exemptions of income tax. So, exemption is meant by the amount of money that will not be taxed. So, the exemption also will reduce the income subject to tax. So, in this exemption of club, there are two exemptions, which is under para 26, that consists of national amateur sport organization and the exemption of state amateur sport organization. For under national amateur sport organization, it must be certified by the president or secretary of Olympic Council of Malaysia to affiliated to council during basis year of any year of assessment. For state amateur sport organization, it must be certified by president or corresponding officer and secretary of an organization to which para A applies. It is to affiliated to the organization during the basis year of any year of assessment. For record keeping, the income derived from transaction of members or non-members has to be separately accounted, and this record has to be kept for 7 years. Meanwhile, for tax filing, the tax return is to be furnished on or before 30th June in the following year of assessment.
Alright, now I will explain about the computation of the chargeable income and tax payable of club in Malaysia. A club, association or similar institution is conducted either for the benefit of their own members or for the public interest. If a club, association or similar institution is meant for the benefit of members only, any income arising from mutual dealings with the member is not subject to tax. Example of mutual receipt from members of a club is like the entrance fees and members subscription fees, the drinks and foods provided or sold at the club or the institutional bar, and amount paid by members to attend dinners or social function organized by the club. And the last one is the amount paid by member to attend a talk, presentation or workshop organized by the club, association or similar institution. And the income from transaction with the member and any expenses or capital allowances attributable to such income are to be disregarded for the purpose of the ITA pursuant. And even though income derived from transaction with member are not subject to tax, not all transactions involving members are necessarily mutual receipt. Alright, now I will explain about how to compute the chargeable income and tax payable of club. This is the hands-on example on how to compute the chargeable income and tax payable. First of all, we need to state all those revenue and expenditure incurred by the company. As we can see here on the left side, there is a receipt column which tell us about all of the revenue that derived for the club from the members. The items that need to be stated on the receipt column is such as members subscription fees, members entrance fees, sales of ticket of annual dinners for both members and non-members, interest from fixed deposit, and the last one is rent from subletting of club premises. And meanwhile, for the expenditure column, there is some items that need to be stated too, such as maintenance of clubhouse, magazines and newspapers, annual dinner for both members and non-members, depreciation, postage and stationery. And for the last one, the surplus, it shows the difference between the receipt amount and the expenditure amount. Any surplus of receipt over expenditure in respect of income from transactions with members must be used for the benefit of all the members of the club, association or similar institution. And after we calculate all those items on the receipt column and on the expenditure column, the amount that we have is 75,000 for both receipt and expenditure. Alright, this is the next step on how to compute the chargeable income and tax payable of the club. We need to determine what are those gross non-taxable receipt and what are those gross taxable receipt. For the gross non-taxable receipt, it is all income revenue from the mutual, which is from the members. And for the gross taxable receipt is all those income derived from non-members. As we can see here, there are first two items, which is the members subscription fees and entrance fees. Both are the income derived from the members, so we should put them on the gross non-taxable receipt, since this is the income derived from member, which is the mature receipt. For the third item, it is for the annual dinner. As we can see here, both gross non-taxable receipt and gross taxable receipt has their own amount, which is 10,000 ringgit for the gross non-taxable receipt and 8,000 ringgit for the gross taxable receipt. Where do we get those figure? Those figure is the income derived for the club from the sale of ticket for the annual dinner. And for the last item, it is the other income, which include interest from fixed deposit and rental from tenant, which amounted 8,000 ringgit and 21,000 ringgit. Both income is not derived from the members, so we should put it on the gross taxable receipt, non-mature receipt. And for the last one, we need to total up all those revenue for gross non-taxable receipt and gross taxable receipt. For the gross non-taxable receipt, we get an amount of 38,000 ringgit, and for the gross taxable receipt, we get a sum of amount of 37,000 ringgit. Alright, lastly, we are going to calculate or to compute the chargeable income for the year assessment 2023. The first item that need to be included here is the sale of ticket for annual dinner to non-members amounted 8,000 ringgit. Only revenue on sales of ticket for annual dinner to non-members need to be stated here because it is taxable. Meanwhile, the sales of ticket for annual dinner to the members are not taxable as stated on the public ruling, and we need to deduct it with the annual dinner expenses of non-member amounted 4,000 ringgit, and we get an amount of 4,000 ringgit. Next, we need to add on all those income such as interest and rental income amounted 8,000 ringgit and 21,000 ringgit respectively. And here, after we add on all the income, we get an amount of 33,000 ringgit, and that is the chargeable income.
Last but not the least one, how to get tax payable. As we retrieve the chargeable income of 33,000, we follow according to the budget of the year 2023. So, the tax on the first is 20,000 ringgit equals to tax payable of 150 ringgit, and we plus with the tax on the next of 13,000 times with 3% equals to 390, and we plus them both equals to tax payable of 540 ringgit Malaysia. So that is how much the tax payable they need to pay actually. So that is all from my tip group 2. Thank you so much for listening and have a nice day ahead. Bye bye.